And we can finally say that Zambia has reached a significant milestone in its debt restructuring process by agreeing to a deal with its creditor group holding its international bonds. Now, the deal includes a $700 million write-off and a $2.5 billion in cash flow relief during the period of Zambia's $1.3 billion 38-month IMF program. The proposed restructuring includes issuing two new amortizing bonds maturing in 2035 and 2053 under a base case scenario. Now, both bonds would mature in 2035 if Zambia's economy performs better. The deal provides both immediate and future debt relief, which will help the country to manage its debt burden and regain access to international capital markets. Caeser Cheelo, developmental economist, joins me now to look at what is a landmark and probably historic moment. Caeser, welcome again to Business Edge. Thank you so much for joining me.
Thank you very much, and thanks for having me.
So Zambia was the first African country to default in the COVID-19 era in late 2020, but we've seen the restructuring process being beset by delays. Now, 2 years down the line, 3 years into all of this, we finally have something to move forward with. But let's start with looking at the delays. Why were there so many delays in getting this process started and even moving along with the process?
Yeah, I mean, the bottom line is when you owe people money and you are asking for relief of any kind, there will obviously be a lot of caution in the way that relief is provided or granted. So the restructuring has taken a long time basically because of that. We have to remember that the creditors that Zambia owes money were also exposed to a lot of other countries. And the issue is, how do you manage the possible contagion that could come online from granting debt relief to Zambia? So there are countries like Ghana, countries like Ethiopia, Chad, that were also looking for some sort of debt restructuring deals. And the question is, for countries like China, creditors like the Eurobond holders, how do they manage these downside risks of everybody asking for haircuts and everybody asking for restructuring in terms of extended repayment period? So there was quite a bit of caution. The negotiations became protracted because everybody was negotiating hard and so on. But fortunately, a number of landmarks have already been achieved. An IMF deal in August 2021 to the tune of $1.3 billion. The official creditors also came online in June of this year with a restructuring deal for about $6.2 billion. And now the private creditors, being the Eurobond holders, have come online with the deal that you were just pronouncing. So things are looking pretty good for Zambia in terms of managing its debt overhang.
But interesting enough, I think we also have to recognize that eventually all of those who were holding Zambia's debt would have to come to the table. At a point in time, no matter how long it took, they would need to arrive at a deal with Zambia, because it simply was not going to be a situation in which Zambia was going to be able to pay. So it just felt like this was extended in a way that was quite unnecessary. But beyond that, let's look at the deal now. So it proposes restructuring existing bonds by issuing two new amortizing bonds maturing in 2035 and 2053. So these bonds involve repayments going towards both principal and interest. So Caeser, take us through how this would work. How are these particular bonds possibly different from traditional bonds in this debt restructuring process that Zambia is going through?
They're not significantly different. The issue is we had three bonds running in parallel, the Eurobonds. And it sounds like they've now been consolidated into two. And the principal amount, which was the $3 billion plus any arrears that were accrued since Zambia defaulted, have all been compounded. And we now have two bonds running in parallel, as you have said, one going to 2035 and the other one going to 2053. And essentially what that does is just extend the maturity period. I'm not sure in terms of the detail whether the coupon payments, the interest payments, the interest rates change significantly. I haven't looked in detail at the intricacies of these deals, but essentially that's how it works. Is you have now a new contract with your creditors that extends the maturity period to respectively 2035 and 2053, and also possibly changes the grace period before which you start to pay or resume your debt service payments. And most likely, in terms of haircuts, there's a reduction in the interest rate that is applied to the bond.
So let's look at the second bond coupon payments, and this is expected to increase if Zambia's economy performs better, but that's the bond for 2053. So that does give a bit of a space, but again, expectations that things will turn around a bit more quickly. So do you think there'll be significant improvement, enough for us to see this bond maturing ahead of time, and particularly under the period under review?
My sense is there's a significant chance of that happening. And the reason being that Zambia in parallel is undertaking significant policy, regulatory, institutional, and structural reforms, quite a wide range of things. The Zambian economy was traditionally used to subsidies, and many of those subsidies, because of the debt overhang, have been taken away. A lot of public investments now being rechanneled towards things like constituency development, so rural development, which is balanced and trying to cope with poverty that way. A lot of things to do with agricultural support, a lot of things to do with education and skills development, all the basic ingredients that you need to unlock the potential of an economy are being paid attention to within the restrictions, of course, of a constrained fiscal space. But those things are being undertaken as part of the sort of economic transformation and job creation reforms that the government that came into power in 2021 has been undertaking. So if those pan out, if these reformist sort of items pan out and are actually able to deliver development, then you can expect a lot more activity, a lot more economic growth, a lot more fiscal revenue return to the government, and therefore a stronger ability of the government to pay back its debts.
So when we look at the bonds a bit more, because maintaining the face value of the new bonds, which stands at about $3.135 billion, and this exceeds the original $3 billion face value of the old notes. Is there any importance we can attach to that bit of what we say as an increase? If it's important that the face value of the new bonds matches or even exceeds that of the old notes, how much impact could this also have on Zambia's debt position when we're looking at what the new bonds are bringing in?
Well, with the last question first, in terms of impact on the Zambian debt position, I think there's a marginal increase. So the original face value was $3 billion. It goes up to by $135 million to 3.1. I think the importance of this is it shows the investors that Zambia is serious about paying back its debts, including any arrears that were accrued since Zambia defaulted. So it will be a little bit more painful because the total principal now under the new structure is 3.135, as you have said. It's no longer just the 3 billion. And, you know, this doesn't take away, but adds a little bit more to the total debt stock that Zambia has to continue servicing. But the upside to that is, like I said earlier on, is the maturity period has been extended. So even if we were not able to get a haircut in terms of reduced interest payments or interest amounts, interest levels, you still get relief in terms of you have an extended period over which to pay back your debts. So that is a little bit of relief, but certainly the debt overhang remains quite big for Zambia.
Okay, so there was a bit of a reaction on the international markets as Zambia's international bonds rose after the announcement, with some bonds gaining as much as 3.9 cents on the dollar. So are we going to say that this increase we saw is tied directly to the deal? But even beyond that, would it be too early to draw any conclusions about investor confidence, or we can safely say investors are confident that Zambia can finally pull through with all the details and, of course, find its way out of this debt situation?
Yeah, I think on the first part, I think that sentiment is very much to do with the deal. I mean, the international markets are always very closely watching every economy that is a sort of major risk factor. and seeing how A, the reforms are happening, and how B, the debt management and debt negotiations are going. And immediately the deal was struck, you saw a rallying on the bond rates. And that is essentially a sign of confidence. If your bonds are trading at a higher level, it means there's more confidence from the international markets that the Zambian economy's ability to service the debts, to honor these bonds is higher. So definitely they're becoming more attractive. And backed by that, again, like I said, the reforms that are happening domestically in Zambia are also adding to the investor confidence that we're seeing across the globe. Zambia has signed off a number of deals in energy, in infrastructure development, in manufacturing and things like this that are showing confidence that the country is moving away from debt dependency to foreign direct investment dependency. And just that move is building confidence with international investors.
Okay, so maybe I'm asking for a little bit too much. Some might say this is an Oliver Twist situation. But do you think we could expect sometime in the near future, in the next few months maybe, or even in the next just 1 or 2 years, a situation where we see these newly structured bonds being eligible for inclusion in major fixed income indices like JP Morgan's Emerging Markets Bond Index? And if we saw something like that, how would that in its own way impact this debt conversation, or impact also the maturity and the conversation around the bonds that Zambia is introducing now?
My sense is, like you said, it's a tricky one. First of all, you need a sort of crystal ball to predict this. But I wouldn't be surprised if somewhere down the road that happened. I think the main implication is about the tradability of the bonds on international markets, not so much for Zambia. I think for Zambia, we are locked into a restructuring deal that is being reached now. And the only changes are dependent on whether the Zambian economy performs better than expected. So the scenarios might change on that basis. But the implications for Zambia specifically are relatively minimal, whereas the implications for tradability of the bonds across the international markets are a little bit higher. But I would very much hesitate to say if and when such a move might happen.
All right, so the government needs to put this agreement to a vote of the bondholders through an exchange offer with amortization payments beginning in December. So yes, it's a landmark deal. Yes, immense progress, but there's still that very critical part of getting the bondholders to buy into this deal. So are you confident, Caeser, that the bondholders will sign up for this? Because also on the other side is, what are the other options that they have if they don't agree to the deal?
That's precisely it. And that's where I'm confident is there are very few options on the table. If you don't agree to a restructuring deal, then you are forcing a country to stand still on your component of the debt as a creditor. And if you do that, then prospects for you to recover your money and the interest that you were expecting diminish. So on that basis, looking at the different rounds of negotiations with different creditors, starting with the IMFs, then going to the official creditors and things like this, it almost becomes a self-fulfilling prophecy that everybody has to negotiate until agreement is reached. So the more you protract a negotiation, the more difficult it is for you to get paid, and the longer it takes for you to get paid. So those are some of the challenges that we potentially face if anyone decided to backtrack or stay away from the negotiations. On that basis, I'm fairly confident that all the bondholders, all the creditors will basically, when their time comes, play ball and be willing to negotiate and reach agreement.
Okay. So the bonds are not the only part of this particular restructuring. Let's not forget that this also includes a $700 million write-off and $2.5 billion in cash flow relief during the period of which Zambia is under the $1.3 billion 38-month IMF program. So when we look at that, how does this change the situation of things for Zambia's debt position? Getting this write-off, getting, of course, more money, cash flow relief as well, going into the economy. What does that do for Zambia's debt position?
In terms of debt position, it really gives quite a bit of relief because remember, any debt that requires interest payments means there's additional pressure on the economy and on the balance of payments. So $700 million is it's not a small amount. It means there's a lot of relief. The cash flow, the injection into the economy. Remember, Zambia is a developing country and has development aspirations, including infrastructure development, human resource development, and things like this. Those things cost money. And with a huge debt overhang, on the other side, the government would be financially and fiscally constrained. But with the inflow of these monies, then the government has that much more to afford different government programs, constituency development fund, sustaining hired teachers and health workers for human resource development and things like this. All those things become a reality. Extending road networks, improving the roads, improving energy profile for manufacturing and for mining, for agriculture. All those things become a reality only if we are given debt relief and we are acquiring this debt relief and are putting the cash flow injections to good use and very rational about how we program the public expenditure and are able to sort of appraise the different projects that the government will invest in.
So I want to bring you back to something you mentioned earlier, and that was, of course, around how this situation might lend itself to situations involving other African countries, sort of like Ghana. We know Egypt has its own crisis right now as well. But this debt restructuring or debt relief has been something that African leaders have been pushing for the past 2 years or more. So let's start, as we start wrapping things up, in terms of the lessons that can be learned from Zambia's debt restructuring experience. So it might be difficult to say other countries completely can avoid the default situation. We've been hearing about debt distress. Those are on the cliff. But Zambia simply seems to have been the only country that has gone over. What are we learning from this experience that you think other African countries in particular need to keep at the forefront as they are engaging in these conversations or the potential of seeking debt relief and debt restructuring?
For me, I think two big lessons. One, have a very steady team in your finance ministry and in your central bank. Have a very steady and sober team that is willing and able to design a course of action and to pursue it irrespective of the sort of white noise that is going on around. Like we said earlier on, the Zambian journey to debt restructuring was pretty long, pretty protracted, and difficult in terms of the negotiation. But we had a solid team in terms of the people that were negotiating out of Ministry of Finance, all the way from the minister himself and the central bank governor and his team. These are very seasoned, experienced people, but they were also very steady in the way they negotiated. They stayed the course, even when people said, let's do reversals and let's try out different options for negotiating. That's one. And the second thing is it won't be easy, and you need to show proof of life. So prior actions, what are you willing to do before you even interface with the creditors? Zambia undertook a lot of initial reforms immediately the new government came into office. They dismantled subsidies on fuel, on electricity. They reformed a huge agricultural support program. They started channeling more resources towards social sector spending and so on. So those prior actions really showed that Zambia was very keen, very serious about the business of debt management and fiscal management, fiscal discipline, and things like that. So if you're going to, as a country, send that signal, you need to have a solid game plan in place, and you need to be consistent about it. You need to take those prior actions. Those are the lessons for me that reign sort of high from the Zambian experience.
So before we wrap things up, if we can get back on the screen who Zambia owes debt to, we see that this is a very, very positive development in terms of the Euro bond holders. But beyond that, also look at the percentage that is held by China. That's 22%, and multilateral institutions 18%, and other governments 8%. Any updates on this conversation as it has to deal with China, as it has to deal with also the other multilateral institutions? We know that the IMF and the World Bank have been pushing for these restructuring conversations and using that sort of as a carrot and stick sort of situation. But in interest, particularly for me, is what is the Chinese stance to all of this as of right now?
Yeah, so the Chinese stance, again, seems quite positive in my view. And the reason is this, because China was co-chair on the official creditor committee. And a big part of the $6.2 billion that was restructured under the OCC was Chinese debt. So, of course, it required going back to the drawing board once the overall agreement was had to get specific memoranda of understanding with the different bilateral creditors, including China. And as I understand it, this has been had just, I think, earlier this month in October. So China is very much in the pocket in terms of the debt restructuring and things like that. Of course, when you get into the detail of it, there's a lot of cultural factors behind it in terms of the way China agrees to debt restructuring and also offers additional sort of foreign direct investment options for Zambia to improve its ability to pay back the loans. So that's a very positive outturn. Multilaterals as well. There's already a deal since August 2022 led by the IMF. So the different pockets of debt have all sort of settled in terms of agreements of a restructured profile with prolonged periods, including the China debt. So that's pretty good news. But like I keep saying, Zambia is not out of the woods yet. There's a lot of domestic fixing that needs to happen. There's a lot of domestic work to reboot the economy and to get growth going, to get jobs creation going and things like that. And it's early days yet, and the road ahead is still very long for Zambia to get out of the woods.
And with that road ahead, we'll continue to monitor the situation. Caeser Cheelo, developmental economist, thank you so much for joining me.
Thanks for having me. Thank you.
Fantastic. And when we look at the debt restructuring conversation, it can be a very complex and time-consuming process involving multiple parties, interests, and issues. But some of the common features of debt restructuring agreements are trade-offs between the creditors and the debtors' interests, such as lower interest rates versus longer repayment periods. The success of the deals also depends on implementation, and there are potential risks and challenges that can derail the process. But overall, the debt restructuring agreement is a positive development for Zambia and its bondholders, and it could pave the way for similar agreements in the future. You're watching Business Edge. We have international business headlines coming up, and after that, a conversation on addressing Nigeria's forex crisis. Stay with us.